ScotPac has reported that it successfully priced a $250 million asset-backed securitisation. So what does that mean for the company's outlook? Jon Sutton is the Chief Executive of ScotPac. He joins us now. Jon, good to see you again.
Great to be back here, Andrew. Thank you.
All right, so tell us why you've gone through this transaction. What's it applied for?
ScotPac is one of Australia's largest, if not the largest, non-financial, non-bank lender in the marketplace. And we've successfully been marketing asset-backed securities for the last 2 years. We have a very large asset finance book. We participate in the market. We fund lots and lots of SMEs for their working capital and also for their CapEx needs. And ScotPac is becoming a programmatic issuer of these asset-backed securities, which have been well supported by international investors and domestic investors.
All right, so I mean, you talk about the fact that you are an alternative to the banks then. How does this set you up?
Look, ScotPac can lend from a few $1,000s all the way up to 200 million. We focus primarily on working capital solutions. We're using debtor finance, term loans, and asset-backed solutions as well. We often do a combination of those transactions. You know, we've been doing our SME index for nearly over 10 years, and what we are seeing and what people are telling us, particularly in SME land, is that they are looking to use more non-bank lenders, and non-bank lenders are on the rise because they meet more needs of these SME customers.
All right, asset-backed security then. Just tell us the definition of that and I guess all the assets involved then.
Yeah, basically it's what everyday businesses are using, whether it's cars, trucks, machinery, equipment, in their businesses. In our case, the asset-backed securities that were pooled and sold off to a huge range of investors, both domestic and international, are things like cars, trucks, trailers, diggers, all those sorts of assets that are used in productive business.
All right, so altogether, so pricing, you're talking about perhaps being tighter than it was last year. Why was that?
Look, Australia is well recognised in this particular asset class. There are lots of issuers. Offshore investors have been chasing these assets for many years. It's a well-developed market. You know, there is a huge appetite out there, particularly for Australian-based assets such as these. And we are really pleased that we've got not only the previous investors that have come through again, a series of new investors as well in this asset class.
Can you give us an idea of who those investors are?
They range from international banks to fund managers, private credit providers. So there's a whole gamut across the investor stack, both international and domestic.
All right. What's the credit quality of this? And I mean, are you actually rated by the agencies?
Yeah, we are. So yeah. It's quite traditional asset-backed securitisation program that we run, and all of the notes are rated. All the notes are rated by Moody's, and again, it's an external rating agency. It's a well-developed market. There is huge investor appetite, and we saw that through the reduction in the spread that we have paid last year to this year of around about 45 to 50 basis points lower.
Overall then, Jon, how would you describe the current environment out there and demand for asset-backed securities?
Look, I think the demand is really strong, and what it really enables us to do is to recycle our capital and allow us to actually do more for our clients. So we've got strong availability to meet demand for SMEs or corporates that are looking to make further investment into their business, particularly for productive asset types, so cars, trucks, civil equipment, mining equipment, all of those sorts of asset classes. We're able to fulfil those needs. And I think it's really important. There's a great discussion at the moment about productivity in Australia. We need to make sure, as an Australian as a nation, that we're investing more in our productive assets. And this allows us to be able to make available credit to those firms who are doing that.
Given the current interest rate environment, obviously with the prospect that they're going to be cut further, but that would potentially reflect perhaps a weakening in the Australian economy. How does that set you up, and also I guess in terms of demand?
Yeah, look, certainly it's a double-edged sword, so it might be reflecting a slowdown in the economy. We saw that in the GDP numbers, But again, our research is telling us that there are a good number of SMEs and corporates that are looking to invest in their business to take advantage of the opportunities that they see. And I also feel that a lower interest rate environment will also bring back confidence to the private sector as well to make those necessary investments.
So, any other plans for asset-backed securities in terms of
so we will continue to be a programmatic issuer. So we'll probably come back to the market next year. There is plenty of appetite for us to continue to lend in this part of the market, and there is strong appetite from investors for these types of programs.